Nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody, from sunny Florida, and I hope everyone stayed safe out there, especially if you're in Florida, anywhere further a little bit north. We were fortunate here. Boy, we got some blackouts, that's for sure. TFNN headquarters in St. Petersburg, Florida. We're up, we're going, thankfully, but yeah, we got a lot of people without electricity. Thankfully, not that bad where I am in Lakeland. Not that bad at all, to be fair. But boy, some of the visual shots, right? We'll pull them up later in the show. I had my best buddy who lives in Switzerland. He was sending me a picture of the Howard Franklin Bridge yesterday, and yeah, they took a little while to close that bridge. Some pretty remarkable visuals. You had Bayshore out there, right? A lot of headlines over on Bayshore of people out and about enjoying kind of the storm, the waves before it really rolled in. Nonetheless, we're back, and hopefully everyone stayed safe and that they get everybody back with the electricity, because we do have some outages. Thankfully, not as bad, but we had some wind, and it's such a big storm across the state. But nonetheless, we are back, and we got markets back as well. We got the Fed's preferred inflation gauge this morning. We'll get to that, but we got markets in positive territory for Friday action, kicking things off. S&Ps, we're up by 9 points. You see the acceleration yesterday to all-time highs at 58.30. Quite a little sell-off, and just like that, We're climbing towards those highs yet again. We're at 58.13, up by 10 points. NASDAQ 100, we're up by 38. That's a gain of about 0.2% right now. 20,384. The Dow pushing the highs of yesterday as well. Absolutely remarkable how this market can give it up, get it back just like that. You're talking about 500 points down yesterday, 500 points back up, and we're right where we were at the beginning of yesterday's trading action, with the Dow up by 86 points right now, positive at 42,641. The Russell leading the way. Check it out, above yesterday's highs, up by 1.2%. Bitcoin up $1,000, 66,205. Crude hanging in the 67s right now, negative by 10 cents on crude, 67.57. You gotta love that price of crude. Gold with some volatility, especially around this 830 number on the PCE, and as I mentioned, we'll get to that in a moment. But boy, we really got some dollar action out there. A little bit of yields, but the dollar's the big move. Dollar weakening, gold catching a bid, but not as big as you may expect when you see this dollar. So you got gold right now down $4 at $26.90. You check out yields. We got a little bit of higher price, lower yield. Okay, and as you get lower yield, what do you get? You get people pursuing dollars to pursue those yields with less demand. Lower yields cause less people to need dollars to access a lower yield, which is less attractive. You're going to get a weaker dollar, but boy, here's some weakness, man, right? You get the drop-off yesterday at 2 o'clock, and then boom, we get another drop-off today, and we might get a 99 handle, folks, on the show today. So in the context of what this is looking like right now, you back it up 2 days, okay? And again, the move is mammoth, right? From 100.2 to 101, and now we're under Wednesday's low. Absolutely remarkable. And meanwhile, yes, you've had some gold moves, but not what you might imagine when you look at, yes, you had this run up yesterday, but boy, gold right where we were on Tuesday, 26.90, literally right where we were, end of the session on Tuesday for gold. And pretty close on the dollar, but we've had extreme volatility, and we are trading lower, and you got the dollar diving lower today, and we jump over to the VIX, sitting at 1531, and yeah, let's take a look at the story of the morning, and it is the Fed's preferred inflation gauge. So August, core PCE, how about just rising 0.1%, right? You can see why the Fed is less worried about price stability when these are the numbers we're talking about here. The PCE, year over year, comes in light, 2.2 versus 2.3. That's the headline. The core number, there's almost something for everybody. You could have said that for a long time, right? Core PCE, year over year, still running at 2.7%. But the last 3 months have been pulling that number down. right? So we come in at 2.2 on the headline, slightly late. Core year over year comes in line, but the core on a month-over-month basis comes in light, and we're only on a headline basis at 0.1. You multiply that times 12, folks, we're at 1.2, right? And I always say, it's a bummer they don't push these out. I want 2 decimal points, man, because 0.1 can mean a lot different from 0.2 in terms of how far they can actually vary. And when you start extrapolating some of that data, that's why they give you the year over year as well. But nonetheless, it comes in light. Yeah, 3-month annualized basis, okay, when you look at this, the core PCE, that excludes food and energy, okay, increased 0.1% from July to August, which is what we just got. We just got August numbers. So the August number for core, as we talked about, right there is 0.1%, okay? Smallest gain in 3 months. And on a 3-month annualized basis, core PCE is now running at 2.1%. Chairman Powell is enjoying that coffee this morning. Spending also rose 0.1%. Nominal personal income increased 0.2%. And the savings rate eased, is how they put it, to 4.8%. Yeah, so you have the market reacting. The rise in spending was driven by a pickup in outlays on services. Overall services spending rose 0.2%. Goods spending was unchanged after a solid advance the previous month. While wages and salaries rose by the most since May, growth in disposable income slowed, restrained by declines in proprietors' income, interest income, and dividend income, as they put it. But nonetheless, man, pretty tough to argue when we're sitting right now at 4.75%, right, which is where we are. That's the lower boundary of the Fed's range right now, 4.75%. We've talked about it many times. I'm going to take a look at it right now in terms of where we are in this market, what the market is pricing in terms of cuts. It's a 50-50 for the November 7th meeting, folks, 50-50. It's a pick'em. Not quite, but pretty much. Market slightly tilted to go on 50 basis points versus going 25 in that camp. Yeah, more interesting, I think, is when you start to go out to something like the January meeting. So we're talking about 3 meetings from right now. The market's pricing in at least 75 basis points of cuts, if not a full point to possibly even a 1.25. That's 3 meetings. To get to that 32%, they would have to go 50, 50, 25, or some combination of that over the, to get to the 43, you'd have to have a 50 somewhere in there, 50, 25, 25, etc. Nonetheless, a lot of cuts. And then we go to June, which I find always interesting. Yeah. So, again, the biggest one here is 1.75 percentage points of cuts by the June meeting, which is 6 meetings from right now, which means that they couldn't even, if they go 25 for the next 6 meetings, that's not even as much as the market is pricing in right now. All right, it's going to be an interesting day digesting those numbers. We got the S&Ps right near all-time highs. You got gold right near all-time highs. You got the dollar contract, dollar futures, trading right near 100 at 100.20 right now. We jump around to some of the Magnificent Seven as we kick off Friday trading. You're going to have Apple shares slightly in the green by about $1 to 228.20 this morning. You jump over to Microsoft. We're going to talk a little bit of OpenAI. Seems like Altman's saying, no, those stories that I'm going to get $10 billion, they're not true. It's not happening. It's not. Nonetheless, they got a little turmoil going at OpenAI that could impact Microsoft. Amazon shares flat right now. Stay tuned, folks. We're coming back. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the S&Ps up by 8, NASDAQ 100 up by 35, Dow up by 80. All the markets in the positive right now. We jump over to that dollar. Because, yeah, you're going to keep your eye on the dollar today, man, with the move we got going on off the PCE numbers. You talk about it. We drive down to 100.20, and we're at a critical area because we're right back to where we were just on Wednesday. We're actually below that level. And I talked to our man Teddy Cakestad on Wednesday on my program, and he was talking about it. You know, as I like to say, sometimes you don't have to be a charting technician expert, right, to look at this chart and say if you go below the price point that we're talking about last year, when you're talking about the middle July of 2023, that low in the dollar 99.57, you break below there, where are you going? You're going to 90, and we're challenging that area. Now, that's what it looks like on a monthly to bring back 90, okay? You put this on a weekly, you zoom in a little bit on the dollar, right? It's just hanging out there. We've been chopping around. We've been down at this level, you could say, 4 prior times. We made the initial pullback when the market got ahead of itself in dramatic fashion, thinking cuts were somehow coming down the line in early 2023. Not happening, folks. Try September 2024. But nonetheless, we come down to that area. We come down again in April of 23. You make that low in July. You touch that area at the beginning of the year as well. And where are we? We're finally right back down here for, the 5th time. 1, 2, 3, 4, and 5. 122. Keep your eye on that dollar. Gold's going to react to that one, of course. Now, it's been quite an acceleration for gold. All right, what is intriguing here, you take a look at the dollar, right? And then you take a look at gold. Now, it's been on quite a run, but you haven't seen those same types of, it hasn't always traded with the inverse nature, right? Because gold, I mean, look at where, for some context here, going back and forth, okay? The dollar is at its strongest in September of 2022. Gold makes lows September of 2022. Not surprising, right? You get that dramatic pullback in the dollar. You talk about weakening from 115 to 102. Dramatic, right? 115 to 102. The dollar rips lower on weakness from October of 2022 to the beginning of 2023. Gold reacts accordingly, and you get an acceleration from about 1600, we'll call it 1618 is the low, up to 2000, right? Chop around, you make a high in the beginning at 1975, you finally get up to that 2000 price point, and that's where you chop around for the whole year, okay? But, again, keep in mind, what did I just put up, right? As in, you just want to keep your spikes up a little bit, folks. Gold's had quite a run. I was talking to Elliot Wallenbach on Wednesday, covering for Tom in the afternoon, and he was talking about inflows and outflows, and it was intriguing seeing how people were loading up on some of the nugget, but just in the last week, they were looking at some of that dust, which is the inverse. Maybe you've had quite a run. Doesn't mean that you're going to pull back, but the reason why I bring it up is because look at this chart, okay, and look at where we are right now, as in you got the acceleration as I talked about. So you have the dollar pull back 2022 to where we are right now, basically. Okay, you make a low in January of 2023 of 100.82. We were just at 100.82, folks, today, earlier this morning, okay? So you're at the same exact price point that the, sorry, I'm going to go back to a 3-week here, and then I got to put it back to the dollar. You're at the same exact price point that you were at the week of January 30th, 2023 last year, okay? But since that time, right, because gold already traded from 1,600 up to about 2,000, recall, right? There's January 30th. You were as high as 1975, so keep that in mind. Gold was trading at 1975 when you had the dollar trading at the exact same price point you were at this morning. And meanwhile, gold is up $700 plus, okay? And the dollar is right where it is. So yes, gold is going to be helped out if we get that acceleration for the dollar from 100 to 90, which could happen, right? This is a critical area on the dollar. We break below this 100 area. It seems like 90, like we talked about. You put it on the longer term chart. Where's this thing heading? If it breaks below this critical area right here of 100, probably heading to 90. That's the next spot. That's the lows of 2021. That's the lows of the beginning of 2018. And you're kind of in no man's land until then, because this was a one-way acceleration from the lows of 2021 right up through that area. You break below. But what is intriguing is you take a look at the gold contract, okay? And there's already been quite a move with the dollar sitting at that price level. I just wanted to talk about that because, yes, it's going to get helped out, okay? It's like having the wind at your back, but it doesn't necessarily mean it's going to have the same exact move. Now, I think there's a lot of things longer term that line up on the bull side for gold. A lot of things. I would have a portion of your portfolio invested in gold, period, end of sentence. Small portion, okay? But I would. But that doesn't mean that gold can't digest some of the action, okay, just as the dollar digested some of the action, because it is intriguing when you look at it in that context, right? You have gold trading at 2,700. Meanwhile, the week of January 30th, 2023, you were as high as 1975. And meanwhile, you pull up the dollar, okay? And the week of January 30th, we're trading right where we were right now. So the dollar is where you were a year and a half ago, and gold is 35% higher. So just keep that one in mind. If the dollar trades lower, which is expected, okay, it's not a guarantee. It could happen. I'm just putting it out because when you look at that chart, it is remarkable. The dollar, and listen, we've gotten volatility, right? We've gotten higher, we've gotten lower. We're at a little bit of a weaker level, and it looks like it's challenging the lows. And all things considered, with where the Fed is, etc., it seems like that could be the case. And gold could trade higher without that move as well. I'm just showing you that the relationship doesn't always play out exactly how you may imagine. Because if you had told me, right, if you had looked at the dollar chart, DXY, and somebody asked you the week of January 30th, 2023, when gold was trading at 1975, and you said, listen, I'm going to show you the chart of what gold looks like, what the dollar looks like, and you tell me where gold is going to be. This is the last 2 years. The dollar chopped, right? We were down, and they tell you right now, you say, well, geez, when the dollar strengthened, you probably saw gold pull back. We probably saw lows for gold in October of 23. We probably saw lows of gold in April and June of 23, and we're probably right back to 2000 right now. And I said, no, we're at 2,700 in gold. All right, folks, stay tuned. We're coming back right after the break. Don't go away. We're coming back for the opening bell.
Usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got S&Ps right now, trading up by 5 points on the open on some light, we'll call it light, PCE data as inflation continuing to ease, you could say. And pretty remarkable. You got markets green across the board. And yeah, when you look at that chart, longer term basis, right? We've talked about this S&P. And we're what? We're 200 points away from an A to B, C to D completing. And that A to B, C to D, folks, is from the COVID lows, which started 2174, and is an A to B leg that is 2,600 points. So imagine you're starting at 2,100, and the A to B leg that you're going to run twice is 2,600 points, and you're going to make that run twice over the period of the next 3.5 years. Now, the NASDAQ 100 gets even more wild because it's a 10,000 point leg, and you start at 6,628, and you make two 10,000 point rallies. You do it first up to the highs of 2021. You do it again starting in the beginning of 2022 until where we are right now. That one completed at 20,623. We've pulled back a little bit off that spike, but we're making a run yet again. But it is intriguing now how all of these markets are lining up to that degree. And the S&P is so close to that area as well. And yeah. Yeah, what's remarkable is the 2634, it's 121% run from the lows. So this market goes up 121% from the lows over a period of almost 2 years. You make a high of 4808, you pull back exactly to the 50% retracement, and then it says, let's do the 2634 again. And we've already done about 2,400 of that again, as we're sitting 2,300. Yeah, 2,300. We're sitting at 5811. Nonetheless, quite the moves. All right, and yeah, as I said, some areas of Florida fortunate, today, but boy, some of these islands, folks, keep the barrier islands and, Sarasota, Madeira Beach, St. Pete Beach, keep some of these islands in your thoughts and prayers going forward, because you still have the barrier islands closed right now, unsafe. This is as of, 7:30 this morning. When you get into downtown areas, but this storm surge that we had on our coast, talking about at least 8 feet in some areas, which just takes out everything if you're talking about the barrier islands, man. Yeah. You got bridges to the barrier islands remaining closed. The water was off. It was unsafe over there this morning. But some tough visuals, of course, for those barrier islands, man. If you're right on those little coastal islands, there was some flooding. It was starting. They had the visuals of Bayshore. Bayshore always floods right there. My home in South Tampa, I'm fortunate that I'm only about a block from Bayshore. Excuse me, but where I am is slightly elevated. I'm slightly out of that first evacuation zone. I'm not in a flood zone. It could happen, but it's remarkable how if you're right on the coast, though, the point being, right, I'm a block away, and I'm not that worried. It could happen, of course, but I'm not that worried. I wasn't at risk during this storm. But if you're near the coast, it happens every single time. My dad talked about, areas in St. Pete, so hopefully everyone stays safe out there. But there's some people dealing with some real hardships this morning, man, so keep them in your thoughts, as that story is pretty much just coming to be. And we're going to see some tough visuals of some of those barrier island communities, man, that are just in tough shape this morning. So keep those, and I'm sure that's just right around us. I'm sure that's happening in different areas of the Gulf as well, in terms of going north from where we are, where it rolled right in. Okay, let's get back to a little market. Let's take a look at some of the Magnificent Seven. Apple shares, they catch a bid on the open, up by 0.7 right now. Amazon, slight pullback. You're down 57 pennies right now. We jump to Microsoft shares. They're flat. We're going to talk about OpenAI in a moment. Google is up by 0.5%. Tesla's up by 1.6% right now. And yeah, let's talk a little bit of OpenAI, Microsoft, the whole bit. And the news reports were out there 2 days ago talking about that Sam Altman might receive a 7% equity stake as they transition that company into a for-profit company. But they held a meeting yesterday, and he said, just not true. Do you believe him? I don't know. The kicker is $10 billion could be at stake. So I read this story today, and I say, okay, he's probably not going to outright lie to the room of employees that he's speaking to. But if he's talking about $10 billion, right? Now, he's a multi-billionaire, but $12 billion is not the same as $2 billion. Will it change your everyday life? Probably not. But it is not the same, $12 billion versus $2 billion. And that's the number you're talking about, $10 billion potentially. And at the same time, there's something going on in this company, man. If you're a Microsoft shareholder, long-term, probably not going to affect the company. It might be the best thing for them if they turn into a for-profit company and Microsoft's stake somehow merges into that and they don't have to play with this facade anymore that they're a non-profit and that the man running it has no equity stake whatsoever. investors have talked about that. Yeah, investors have raised concerns about Altman not having equity in the high-valued AI company that he co-founded. It would make sense if you're a huge investor in there, right? And if it's true that the man running your company has no equity whatsoever and he's a multi-billionaire, even if he's not saying it, maybe his mind is a little bit distracted over another company he might get equity in. For those reasons, it does make sense to a certain degree. Pretty remarkable you're going to start him off with an equity stake that's $10 billion, though. I don't know where that one comes from, right? Who sits in the room and says, you should have some equity, we're going to start you off with a $10 billion position? Usually it's like an option, right? That can mature if the stock price goes up or something. They're just going to start them off with $10 billion. And, yeah, hey, if Elon's getting $55 billion, then maybe the man at the forefront of AI deserves an equity stake of $10 billion, right? To a certain degree. But what you do have going on is these departures are real, man. Yeah, 3 executives on the same day. The most notable, Mira Murati. Am I saying that right? Maybe. She's notable. Been there almost 7 years. She was the interim CEO when things really went haywire. She's out later in the day, and this is what's intriguing. So they didn't do it all at once. She drops out. Later in the same day, you got 2 of the research chiefs are gone. Research chief Bob McGrew and Barrett Zoff, a research VP, said they're leaving the company. I imagine their departure had to do with her departure. What do they say? No such thing as coincidences, right? They don't like what's going on in this company, folks. If they were enthralled by where it was going, if they were on board with it potentially going to a for-profit, they'd be all about it. They wouldn't be leaving. There is turmoil going on. I don't think we're getting the whole story there. Altman had a meeting. He basically said, yeah, don't listen to anything. Fake news is might as well have been what it was, to use the term. Most of the stuff I saw was just totally wrong. We have been thinking about that, and I love how our board has for almost a year independently as we think about what it takes to get to our next stage. But I think this is just about people being ready for new chapters of their lives and a new generation of leadership. Well, I think we all know that's not quite true, right? I'm sure 6.5 years it could be, but 3 of them all dropping out. These stories of him getting equity, the company transforming into a for-profit entity. Excuse me. Yeah. It speaks for itself. It is one of the small risks to Microsoft, but they got a stake in it. They're not going to be cut out. Nothing's going to go haywire, but you just may face a little bit of volatility as there's some uncertainties going on at that company. Nonetheless, market's rolling over a bit. NASDAQ 100 goes in the red. Stay tuned, folks. We'll come back. We'll take a look at that heat map, see what's driving the action today. We'll talk some equities. Don't go away.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. A little bit of a pullback from that spike, but still in positive territory. You got the S&Ps. We spike up to a high of about 58.17. We're just off those highs right now, chopping around on the open. We're still positive by 4 points on the S&P. NASDAQ 100, we roll over slightly in the red by 5 points. Dow charging higher right now. You got the Dow, 42,706, and the Russell up by 20. Bitcoin pulls back a bit as well. We were up almost 1,000. We're up by $700 right now. Crude, 67.52. Gold contract pulls back a bit, and we got to keep our eye on that dollar, man. Dollar gets a little pop from the lows of 100.15, 127 at that critical area of $1 on the dollar, right? All right. Yeah, what are we going to talk about? You guys are having a great discussion in the den talking about those housing. I know it is intriguing, man. They come in, they buy all those houses. Back in 2008, they scoop them up. They're never going to sell those. And, you know, it is interesting when you talk about how you could drive first-time home buyers, right? You got out there the plan, potentially $25,000 for first-time home buyers. You got to do something like that. I was reading an article a year back talking about, and this is going on in the Tiger's Den, folks, and they were just talking about, you know, capitalism, crony capitalism, you know, Wall Street coming in, buying all the single-family homes. They've securitized them. They're never coming back on the market. Well, there's certain ways that you can do that, and it's probably going to take, you know, for all the tax breaks that companies like that get for owning those houses, for writing off the interest, for doing all that stuff, first-time home buyers, individuals, they're going to need a little help on the same front, whether it's something like grants for first-time home buyers. Probably a very good thing for our country overall to use some of those taxes, tax breaks, etc. I read a great article like a year ago talking about the homestead exemption. If you expand the homestead exemption, right, what does it do? It gives people who are actually going to live in that home a little bit of a leg up on investors because of the financial plus that they get by getting an increased homestead exemption, that maybe it gives them a little bit greater competition. There's probably things you got to do, because I agree. Boy, you know, I got my duplex in South Tampa, and I mean, I got 2 young couples, both in there. They're outstanding tenants. I'm very fortunate. And it's not a coincidence, so you see where they are, right? They're in this weird spot, man. They can handle decent rent. They got good jobs. They're paying $2,200 a month to live in a 2-bedroom, 1-bath home a block from Bayshore. But boy, when you have a discussion, because they talk, I say, listen, I never want you guys to leave, right? You know, but I talk, they're good people, and they say, yeah, we'd love to get a house, man, but things are tough right now. You know, they said, looking around this area, my goodness, you know, houses $600,000-700,000 at 6%, putting, even if, you know, whether you put 20% down, you don't put 20% down, you're going to pay some in PMI, et cetera, stuff like that. But, yeah, they're going to need a little bit of leg up, because when you're, you know, coming out of college, 25, 28, making decent income, but competing with the Wall Street firms. You're going to need something like that. That's, I when I read the homestead exemption, the reason why I hinge on it is because I was trying to find the article during that break, and I'm going to try and find it again because it seems so common sense. It's a tax break for homeowners that allows them to compete with Wall Street that's coming in the same way. And I think it's a perfect area, first-time home buyers, something to that degree as well. Because, it's a tough deal if you're renting forever, folks. And, the other thing is people are always comparing your rent to your mortgage payment. Comparable. Cash flow is everything sometimes, right? We see it in companies. You got a cash flow problem, you got a cash crunch, you're in a problem. Same thing happens to individuals. But what you do have to consider there is that a portion of that payment is going into equity. It's not a lot at the beginning of the mortgage, but it is. And that's a bit of a savings, right? Now, houses can be volatile in the same way, and we're probably, it's quite a conundrum right now. But you are paying off some equity in that same payment. So a rent payment, it's gone. You're getting none of it back. You get a mortgage, you get some of that tax benefit that goes with it, of course, etc. And then you do pay off some equity, and hopefully you get some appreciation along the way. They're not making more houses, man. And, I'm speaking to you from Florida. We have the wind at our backs in Florida, folks, in terms of being in a state with population growth, no taxes. You find a decent area, longer term, you're probably going to be all right. All right, we jump around. Let's talk a little bit of Meta. How about it? They've been on a tear. You rip lower yesterday. We're marginally higher today, up by about 0.2%. Take a longer term look at this chart, man. My goodness, right? Now, what's intriguing here is if you look at where we were in the market, I mean, Facebook was its own entity here. Because if you recall, the market make highs. Yeah, it just peaked out prior to it, I guess. But look at how I've just went over, right, the A to B, C to D formations in the S&P, in the NASDAQ. Those A to B, C to D formations began at the lows of 2020. So in Facebook's situation, that would have been this run here. The S&P's pulled back about 50% of that move. So yeah, nothing like it. You drove down below the COVID lows. Market freaked out. Zuckerberg said, all right, everybody, relax. I'm not going to spend this company to death. We're going to make money. We're going to grow. I'm going to trim the company. It takes off, but it is remarkable that you've now traded from 90 to 575. And we'll see if Facebook needs to digest some of the euphoria that it has built into this equity right now. But I bring it up because you're going to see the articles happening all the time with these new glasses, man. Hands on with Meta's Orion AR glasses prototype and the possible future of computing. So they got them in the hands of Julia Borstein. And yeah, you're going to see this happening a lot more, right? The PR writes itself. Yeah. A glimpse of a future that I think is going to be pretty exciting, and I would somewhat agree. Now, yes, they're thick, okay, but they're computer glasses to a certain degree. They're not going to be tiny. That's going to change as well, right? They're going to become paper thin at some point in the future, but not yet. They're just starting. And you're going to have them be able to overlay digital graphics. People aren't going to be able to see them. It's not like you're walking around with an Apple Vision Pro where you become some type of a scene in the middle of public, etc. Yeah, I think you're going to see glasses. They build these things into real glasses that look good, okay? And this is the first prototype. I get it. That's not a style in Ray-Ban to the certain degree. But you're going to see articles like this. This is going to create intrigue. And you think about it, folks. You want to hear how many pictures I have? Let's see how many pictures I have on my phone right now. All right, I think I'm up to like 30+ thousand. 31,857. 31,857. That's what 3.5 years of hanging out with Tommy the Fourth, right? 32,000 pictures. Now, sometimes I'll sit there, you take 10 pictures, you get the right picture. I'm not deleting them, right? You have 32,000 pictures. Point being, just having something, you go to a birthday party, right? Well, you got video. Everybody loves videos and pictures, and it's going to be a simple start where it's something that you can be experiencing a moment, capturing video without being too obstructive to what's going on. You don't have these Vision Pros on. You don't have your hand up with the phone going on, etc. You're just wearing glasses, but you're able to capture those moments, etc. Yeah, I think we're ready for it, man. I think we are. All right, markets in the green, but barely. We got NASDAQ 100 positive by 1. We are going to come back and take a look at that heat map, folks. We'll see what's moving. One more segment. Friday action, markets in the green. Don't go away. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets hanging on to positive gains right now. You got Meta up by 0.3%. We jump over to Apple shares up by 0.7% right now. Amazon slightly in the red. Microsoft slightly in the red as well. We check out NVIDIA shares down by 1% to 122. We check out Tesla up by 1.3%. Intel having a heck of a week, up by another 2% today, up 46 pennies to 24.38. Excuse me. And yeah, let's jump around. You take a look at the Dow. Intel trading higher, but that doesn't matter in the Dow, man. You got Home Depot. That's always going to add some numbers. A $400 stock over there. Visa having quite a week. A little bit of a bounce. Let's check out Visa today. Yeah, up by 1.8%. As they're getting investigated, it looks like you pull back from 293 to below 270. We're up a bit on Visa shares. You jump around to the S&P 500. What's driving some of the action? You see the red up here. You got Broadcom down by 1.5%, right? Amazon in the red. Costco off by 2.7%. Eli Lilly down by 3% right now. Visa in the positive. We got Intel in the positive as well. Google slightly in the green by 0.6%. You got Meta, as I mentioned. Comcast shares up by 1.3%. All right, and we jump to the NASDAQ 100. The usual suspects, of course. You got Intuit in the red right now. Costco, as I mentioned. Yeah, Cintas trading lower by 1.3%. You jump around. Marvel Technologies down by 2.8%. NVIDIA off by 0.7% right now as you get the NASDAQ 100 rolls over to the red. And yeah, it's going to be an interesting one, man. You got gold contract right now trading down about $6, digesting some of the all-time highs we've made on a repeated basis, it seems like. You check out this chart, right? You put it on a 15-minute, just chopping around where we've been basically since we made that acceleration Tuesday to about 26.90, and that's almost right where we're at right now in gold. But keep your eye on that dollar today, because we're getting a little bit of a bounce. We're at 100.30. You were as low as 100.15 in there, but yeah, that is some moves, and we'll finish it up with yields right now. Yields a little bit higher price, lower yield, 114.20 right now. You're talking about on that 10-year, up by 7 ticks, and that is correlating to a yield of 3.76%. 3.76. Yeah. All right, folks. Thanks so much for tuning in. Stay tuned. You got Basil Chapman coming up next. And keep those people in your thoughts, folks, of those barrier islands. Stay safe out there. Have a great weekend. We'll see you Monday morning. Stay tuned for Basil, folks. Have a great one.